Welcome, traders. You're here at freetradingvideos.com. This is Breakout Trader. I'll take you through a trade here that I'm in, and if we bounce to the upside, I'm going to show you how I'm going to manage this position and still maintain the short trade. So what we have here is we get looking at the NDX, the NASDAQ 100. We can see we had the big move to the upside. We came down, we have a swing low right here, we moved back up, we have a lower swing high. This is Friday last week. So right here on Monday, as we broke below that low right there is where I took the entry. Now you can see today we came right down and hit that 50-day moving average and bounced. So this has the potential here to bounce and come back up. Now if that is the case, what I'm looking to do is I'll either sell the 1950 September put or the 1975 put. The put I purchased, I bought, and I am long the 1900 October put. So I could sell the September, which means time decay will be working in my favor. I will be losing time as I am short this put. Or if I want to go deeper in the money, that'll give me a higher delta as well as that time decay component. So that's how I can offset. If the market moves to the upside, I can offset that loss. Actually turn this profitable trade right now into a profitable trade as we move back up, and then I can hold that position back down. So that's one thing I'm looking to do if this market bounces. Let's take a look at the 5-minute chart. I'll just show you the entry on this. Back up a couple of days here. We can see this is what we're looking at Monday. We had this nice, beautiful formed rising wedge. I'm looking for the breakdown to this. Now Tuesday morning we gap down. We trade down to 1910 right here, and we bounce back up. So what I'm looking for right now is to break below this low, and that's what we do right here. And that's where I take that entry on that trade. Okay, so currently very, very profitable trade. This could be an extremely profitable trade if this market continues to the downside. Let's look at the alternative here. Let's have a look at the S&P real quick. On the weekly chart, the S&P suggests we can go back to the upper trend line, which would be 1350, and retest that resistance area. So if we have a look here, let's blow this up a little. It's right here. We've come down, we have one swing low right here, we come back up, we have a lower swing high, two swing lows right here, we come back up, lower swing high than the previous, and a potential swing low here, which would be number 3. Now if we put in number 3 here, we then be looking for the V. Now the V suggests we come back and test point 1 right here, which is also going to be in the area of this resistance here, which means we could look for the double top at 1290 if we do come back up. So it's going to be interesting here the next couple of days to see if we can come back up, test that upper trend line, test that 1290 area, and then potentially look for the breakdown. Currently this evening the US dollar is dropping, oil is rising. We have the Dow, NASDAQ, and S&P futures slightly trading down. Not anything phenomenal just yet, but something to keep an eye on. Now market intervention today. Let's take a look. Check this out, traders. If you've been watching the markets the last 3 weeks, what moves the market? Oil and the US dollar. Which one moves first? It's like who came first, the chicken or the egg? Today the market rocketed to the upside. Oil didn't move. US dollar didn't move. Both went sideways, and the bank went from 22.20 to 22.48. Are you kidding me? This is what we call market intervention. This is a buy program by the Fed. They come in and inject right into the financials, which will do what? Boost the Dow and S&P up, and the NASDAQ will follow. That's market intervention right there. What they're trying to do is save this market. They did it at a critical support level. We had a broken that support level today. You could stick a fork in this market because it is done. This is the market intervention that is costing traders a lot of money right now because they're getting caught as they enter breaking that support level. Then they get creamed by the Fed, and that's exactly what happened to a lot of traders today. My outlook here is I'm long-term short until proven otherwise. Obviously stop losses on all positions, and we'll be hedging positions if this market moves to the upside. Till next time, thanks for attending freetradingvideos.com. This is Breakout out.